Hello everyone, welcome back to my channel. You're watching the stock Monger. Firstly, I'd like to apologize for the long break in between. I was traveling, a lot of family functions, a lot of outings, and I was pretty much engaged all these days. Really sorry for this long break, and I hope to be very regular with my content from here on and bring you the latest in the strategies that we're going to deploy, the levels that we're going to trade at in the indices. So a lot of things going on in the market right now. It's very confusing as to where is the market headed. There were a lot of events that happened amidst these past few days. One is the RBI announcement, where there was a lot of fluctuation and then a directional move. And then there was the US inflation data that just came out yesterday, and that is not giving a good sign to the global markets. So, what are we going to do? How are we going to trade? What is the strategy that we're deploying? Let's get started right away.
Here we have the Nifty 50 chart, and I've just drawn the lines just to show you the channel pattern. This is on a 15-minute time frame, and we have the levels drawn, which I am expecting for Monday. So let's get to it. A little study about the history of the chart pattern. Now let's see. Let's just remove this. Okay, we have a gap that was over here from 26th May to 27th May. There was a gap up opening, and then it stayed above. So this gap wasn't filled, which it now got filled yesterday on Friday, that is 10th of June. So are we looking to see it sustain somewhere in this level and follow the pattern and then break out? A very big possibility if it is able to maintain above 16,100. There is a first support over here at 16,100, and there's another support at 16,000. That is the support levels for Monday. On the upside, if it happens to break the channel, now whenever there is a break in the trend line, now see over here, this is very important. Whenever there's a break in the trend line, here you see the break in the trend line, a rally on the expiry day. Now this has to retest somewhere on these levels as I drew over here. It has to retest and then follow an up move, and then we can draw a line from here where it goes like this. But that wasn't the case. It just opened a gap down by almost 200 points, and just started just falling and falling throughout the day. So whenever there is a channel break, it has to retest at the last swing, and then from there a gradual up move. That is where you can see a bullish market, but that did not happen. So this is the support at 16,110. The second support is at 16,000. Now we're looking at the resistance. On the upside, the last swing was caught at 16,300. So we're going to see some resistance over there. If that breaks and it sustains, then yes, the next resistance level is 16,400. Now, what are the indices that can support the up move? One is IT sector, because IT has been in a correction phase for quite a lot of time, with TCS, Infosys, even Tech Mahindra have been going into a very bearish, very big bearish pattern. So if that sustains, then yes, Nifty will sustain, along with banking. Banking has just been falling and moving zigzag by a lot. We'll see that a little later in this video. So these are the channels which I have drawn, and I'm following this very strictly. The Nifty weekly strangles that I've deployed are updated in the community page on stockmonger.in. Please be sure to log on, register yourself, and follow that strategy. Please do consult your financial manager. You can follow the strategy that I'm doing and see how it works, how I make the adjustments. It was deployed on Thursday. There was no adjustment done on Thursday. There was no adjustment done even on Friday. Now, Monday and Tuesday, I'm expecting some decay if 16,000 doesn't break and 16,400 also doesn't break. So if it's within this range, it's well and good. Although I am expecting a gap down and a down move, but going by the OI data, on Nifty, yes, 16,000 seems to be a strong support for the time being. If that is broken, then we can easily see 15,800 to 15,700 levels. So let's see how that happens. I'll probably make one adjustment on the call side that I have shorted in Nifty. Let's go ahead and see the Bank Nifty analysis now. Here we have the Bank Nifty chart in a 15-minute time frame, and a channel is drawn as you can see. Now, I didn't draw the support and resistance levels because I want to talk about some very important things right now. So, we have the last swing over here at 34,650. That is the first resistance. The second resistance would be where it just took a support and just rallied very briefly at 34,800 approximately. The lower side at 34,350 is going to be a very important level. Let's watch out for that. Anything below that, it could just be a disaster. So what are we looking at now for Monday? Monday, I've given the levels as drawn. It's going in a channel pattern where it touched, came down, tried to go up, again came down. Then as you can see, it just formed the Elliott wave. Now, are we looking for it to come up again and then break down? I would wait. I would not buy in before it breaks 34,750. That is going to be a very crucial level. 34,750 is your level at which above which you would buy futures and options. Till then, you would have to wait for anywhere for it to bottom out and sustain, and then we can see an up move. Again, going by the OI data, very heavy writing at above 35,000 levels. That is indicative that there is no up move coming till the next expiry, that is on Thursday. Now on the lower side, there is not much writing on the put side because it is a little distorted. There's 34,000 level, there's 33,500, there is 33,000. So there is still some volume to be added. Now, if you had seen the volume that was on the 9th June expiry, where some in the money at the money were trading at 33 crore contracts. Yes, that is the highest I have ever seen on a weekly expiry, let alone the month end expiry, on a weekly expiry. 33 crore contracts. I mean, probably that was the reason when they were being squared off and the market started moving up. I really cannot say. So, I had seen that the markets were going to move up, but I did not want to take any chances. I just stayed away from trading on the 9th and the 10th. I deployed a weekly strangle strategy, which is on my website, stockmonger.in. Please do sign up, register, and follow my trades. You can watch the track record totally free of cost. You can see the trades that I've taken and how I've made a good profit booking. Very safe trading, very careful positions that I've taken. So you can follow that as well. As and when the trades are closed is when I update it in the track record. So these are your levels. These are your trading channels for the coming week ahead, Monday and Tuesday probably. Let's wait and see for any up move where we can start buying into equities, some confidence for the investors and for the long-term holders. Till then, we'll be managing on strangles and straddles. So let's see. The VIX is lingering around 20 percent, around 20 levels. So if that can come down to, let's say, below 19 or 18, then we can take a long position on a straddle. So all the strategies are deployed. I'll be coming up with some educational videos on how to make consistent returns on writing options in Nifty and Bank Nifty. So please stay tuned for that. I will post it here. The link will be posted in the descriptions. You can log on to the website stockmonger.in for more information. Till the next video, see you and have a great weekend.